How's it going, everyone? And welcome back to Continues to Tick. Deeper into the month of May we find ourselves, and I will be the first to say, I'm excited. Sometimes we find ourselves going through life without much to look forward to. So that's part of the challenge, right? Is finding ways to stay motivated. Day in or day out, clocking in, clocking out. For me, one of the more focal points of finding motivation throughout this mundane workflow is simply by taking time off, scheduling it in advance, and boom, now you have something to look forward to. Or even on a smaller scale still, like thinking about the weekends, or just your scheduled time off. Be a part of the weekend warriors. Don't be scared. It's actually really bad here in California though, but hey, you gotta work with it. Although I did happen to just come back maybe 8 weeks ago from Cabo San Lucas, for the last week of May, or also technically the first week of June, I have another scheduled week off. I happened to block off at the beginning of this year, and I must say, I'm glad I did. As I'll be taking my family on another trip this year, this time to San Diego, living life on the Southern California coast for a little bit. You see, growing up, my family and I never took trips. If we ever went anywhere, there needed to be a reasoning behind the venture, such as seeing a family member. We never happened to just take a trip just to take a trip, or go on vacation. So once I started working and making a living about now 2 years ago, I decided to always set aside money for this, prioritizing it, as I realized time passes, but memories do tend to last forever, at least forever in the sense of our existence. So in summary, I'm looking forward to the end of this month, and I wouldn't necessarily mind it if it blew by. And I will say, maybe I did happen to front load a bit, but let's hope I can remain sane for the rest of the year, or shall I say, the whole second half of 2021, as I technically have no more week-long vacation trips. But all this to say, find what keeps you motivated. This game of life is quite long, and sure, it's always great to check our dividend portfolio at the end of a working day to find you got paid dividends, or your net worth increased without working any harder. But just remind yourself, find those things that continually give you something to look forward to, big or small. But going into the actual video topic for this week, here we are now, finally crossing the 25K portfolio size. And I will have to admit, quite sooner than I imagined, but I guess on pace for my strategy. Last week we were $8 short, and well, so far this week, today happens to be Wednesday as I record this, there's no doubt about crossing the mark, as we are clearly over, as you'll soon see. I figured reaching the 25K mark is a rather significant milestone, considering we are now 1/4 of the way to 100K. So by technicality, if we do over these last few months, just 3 more times, exactly, just 3 more times, we'll be at 100K. Great math, right? So as we usually do for the portfolio update videos, we'll go a little deeper into the portfolio review than normal, breaking down my sectors, going into sector percentages, giving a summary of my holdings, showing you my portfolio's yield and number of holdings, and giving you a rundown of how much money I'm currently making from this portfolio at a size of 25K. And just given the fact we're barely on Wednesday, towards the end of this video, I'll also check back in at the end of the week and show you the portfolio's weekly ending, along with the activity for this past week. So let's begin. So first things first, I do usually like to start these portfolio review videos with just giving you a rundown of my financial situation and my current investing strategy or plan. So for those that are new, or just as a reminder, I'm currently 25 years old, turning 26 later this year, and about 2 years ago, maybe 2.5 years ago now, I started working as a registered nurse. And a little before that, I graduated college. So overall, I'm not too far removed from that college mindset. And I'm slowly acclimating myself to this adult life, or the world of being an adult. And so far, the journey has been interesting. There's been a lot to learn. And I think slowly but surely, I am getting acclimated and getting used to what it is to be an adult in this life and society. I do currently have a long-term partner. We've been together for approaching 5 years now. And we do have a little puppy, or I guess an older puppy now, a 1-year-old toy poodle named Archie. But that's our family. And before, let's say, just 2 weeks ago, or even, 2 weeks ago, we were living in a 1-bedroom, 1-bath apartment, an upstairs unit. And it wasn't until recently where we decided it was time to keep progressing in life. And now we went from that 1-bedroom, 1-bath apartment to a 2-bedroom, 1-bath house. And the extra space has been nice so far. We're still slowly unpacking, but that's overall my current situation. In terms of my financial strategy, I currently have the ability to invest $500 every single week. I happen to work as a registered nurse, like I mentioned, and doing so, I do have a fairly good position in the middle class. And as I continually say from time to time, I'm very fortunate to be in that position, to be able to go at that pace. And so far, I haven't faltered. So $500 goes into the dividend portfolio every single week. And overall, that's my priority. I also do happen to work as a registered nurse for the state of California in a correctional facility. Very interesting place to work indeed. But by doing so, by working for the state, I'm also building up a pension on the back burner. And hopefully after 20 to 25 years, I'll have a nice pension to speak up for me and be able to rely on. I do also happen to have, further on the back burner still, is my overall goal to slowly invest into real estate. Because the dividend portfolio is my primary focal point, saving up for real estate has been quite slow, quite stunted, I guess you can say. And I also happen to live in California, which is very expensive. But hopefully in the future, I can also have 1 or 2 rental properties, or maybe a rental in a house that I'm actually living in with my partner. So hopefully that gives you a nice general rundown, something to kind of give perspective in terms of my overall situation, financial situation, and investing strategy as we go into the portfolio update of the $25,000 mark. So here we are, currently in the Jesse's Cash Flow portfolio. As I did mention, we are currently on Wednesday, so the week isn't necessarily over. So I do plan to check back in towards the end of the week and do the activity overview, just like we always do, where I kind of show you the dividend payouts. So for now, we'll kind of skip that, but towards the end of the video, we'll come back and slightly touch on that before we close out this week's video. But here we are, crossing the 25K mark. It's a presence. It's a quarter of 100K, and it's definitely a milestone to be proud of, which I am, and I am excited. For those that are new, or just as a reminder, I did start this portfolio on July 20th of 2020. My very first dividend payout was from Apple, and it was 8 cents. So progress has been made. Since the beginning of this portfolio, back on this date of July 20, 2020. From that time till now, I've been investing $500 every single week. And although we haven't reached the 1-year mark so far, here we are at $25,635 with an overall return of 37.46%, which equates to a total gain of $3,939. And according to M1 Finance here, this gain includes an earned dividends of $288 and just of market gain, which is $3,651. And this is from the all-time chart. Given this is a portfolio update, I'll go a little deeper into the portfolio review than we normally do. But if you're curious and you want to see exactly what I'm holding and take your time doing so, there'll be a link to sharing my pie in the description box below. But as I do point out, I'm not a financial advisor, I'm not a financial planner, I'm just your average investor. Someone who simply did their research, looked into different investing strategies, found the dividend investing strategy, and happened to just find the holdings that best fit my needs, best fit this strategy, and just go with it. One thing to point out is I don't frequently sell, but I do frequently buy. But I continue to buy into everything that I'm holding. And I try to really limit the movements of this portfolio. I kind of like the set it and forget it strategy. And so far, I would say it's been playing into my favor. And we'll just have to see how it continually plays out. But as we go down here, you can see I do have the portfolio divided into sectors, just as most people who use M1 Finance do. My biggest sector allocations are the index fund and the ETF, sure, at 10% each, which is 20% total. But I do have real estate here at 13% and currently has a return of 25.35%. I also have consumer staples at 12%, which is technically the second biggest individual sector. And it has a return right now currently of 34.62%. The ETF here is 10%, like I said. The index fund is 10%. The ETF is up 63.42%, which is pretty neat to see. If we click on it, we can see that it's actually SPYD. If we go back here, we can see the index fund. It's up 27.73%. Next on the list, we have utilities at 10% of the portfolio, and it's up 28%, followed by tech, which is also at 10%, which is up 24.8%. Then we have financials set at 9% of the portfolio size, which is up 62.29%, which is actually doing fairly well. And if we take a closer look, you can see I have JP Morgan at 26% of this sector, followed by Aflac, CTBI, and Chubb. But Aflac and JP, and even CTBI, have been doing fairly great. If we go down further still, we'll go down to industrials, which is 8% of my overall portfolio. It's up 47.72%, followed by healthcare, which is 7%, and it's up 24.76%. Next up, I have communications, which is the boring communications, which is 5% of the portfolio, and it's up 34.28%. but let's go ahead and just take a look. So in this sector, I do have AT&T, Verizon, Comcast, and Omnicom. But take a look at Omnicom. It's 23% of this individual sector, and it's up 85.83%. So boring Omnicom is doing interestingly well. And as we move further still, we got energy here, which is just 3% of the portfolio. And as we get closer to the end, we do have materials here, which is only 2% of the portfolio, up 40.55%. And lastly, consumer discretionary, which is only 1% of the portfolio. And if we were to click on it, I've shared it in my last portfolio update, but it's one I easily will share. It is McDonald's. You cannot go wrong with McDonald's. It is literally everywhere, and it is currently up 20.53%. So I know I didn't show all my holdings, but if you're curious, go ahead and check out that link in the description box. You can take a look and see everything that I'm holding in real estate, for example, if you're curious. If you have any questions about anything that I'm holding individually, definitely leave a comment down below and I'll get back to you. But now if we go into research tab here and we go to my pies, I'll show you guys what the portfolio is actually yielding currently and the number of holdings that I currently have in the portfolio. So here we are, as you can see, in the Jesse's cash flow portfolio. And interestingly enough, it says over a 5-year period, we'd be up 139%. Pretty cool, right? From 2016 to currently 2021. But here we are. You can see in the Jesse's cash flow portfolio, we're currently holding 51 individual holdings. This includes the ETF and index fund, everything, a total of 51 holdings. So it does seem quite a bit, and sure, it's leaning on the over diversification side, but I kind of figured it was like buying a bigger pair of shoes as you're growing up as a kid. You'll kind of just slowly grow into them. For me, I chose to be over diversified early on because I figured I'm going to continually funnel money into this portfolio, over time, over many years. And in the grand scheme of things, once we get into 100K, 500K, maybe even $1 million portfolio size, 51 holdings won't be that many, at those points in time. And if we go over here right next to it, according to M1 Finance, the dividend yield is currently 2.685%. Rounding it, it'd be about 2.7%. It's not too bad. I'll kind of keep an eye on it. I think slowly over time it's kind of decreased, but anywhere around 3%, a little under 3%, I'm okay with, especially considering that the expense ratio for the overall portfolio is really, really low at 0.01%. All right, so here we are in the Div Tracker now. This is an app that I just got from the App Store. I forgot exactly how much it cost, but it was paid for. I'm not sponsored or affiliated to this app by any means, but it was one that I chose at the very beginning just to kind of keep track of, the amount that I'm getting paid in dividends on a yearly basis and monthly basis. And it's just one that I've actually enjoyed using it. It continually gets updates and it's been fun to use. So if you happen to have an iPhone, I don't know if it's on Android, but it's called the Div Tracker if you're curious. So as you can see, it's fairly close to what my portfolio is reflecting at this time. I do have to plug in the numbers manually, so maybe there's a little slight room for error, but you kind of get the gist. $25,628 here on the Div Tracker compared to $25,635 on M1 Finance. And if you look underneath, you can see the composition. VIG and SPYD are the biggest holdings by percentage, which is technically as planned. And everything underneath it, besides the other section, which is 38.2%, I believe it's just because Div Tracker can't process, some of the holdings. Overall, you can kind of get the picture that none of my individual holdings themselves are above 5%, but let alone 4% or even 3.5%, which is kind of what I'm actually targeting for. I don't want any of my holdings to be above 5%, and if they're even below that, even better. But if we go over here to the annual dividend income, you can see that it's currently $751. So that's how much I'm making in dividends for the year. And if you break that down, the monthly dividend payout of the portfolio is $62.58. And if you want to break it down further still, on the daily basis, I make $2. Interesting to know. And if you notice, there's a slight discrepancy. According to M1 Finance, my portfolio was yielding about 2.7% rounded. And here on the Div Tracker, by putting in the numbers manually, and I'm unsure exactly how they track the, each individual holding, but according to the Div Tracker, it says the portfolio's yield is 3.4%, which if that was true, it'd be a little higher for sure than what I would actually want it to be. Somewhere in between 2.7% from M1 Finance and 3.4% from this Div Tracker. I would imagine that would be what my portfolio is yielding. So this is an interesting thing to note. So down here I set a goal for an annual dividend income of $1,000. I'm currently at $751, so about 75% reached. And it says if I was to invest $7,284 more into this portfolio at its current yield and everything, I would reach that goal with a $7,000 investment. So sooner or later, we're definitely going to reach it. And that would be a nice milestone for sure. So that's going to be it for this part of the video of this portfolio update. The next update I anticipate will be at $30,000. And technically I was going to skip from 20 to 30, but I figured 25 was 1/4 of 100K. And it was definitely a portfolio update to be recognized. I enjoy doing these, and I'm looking forward to the next one. And just to wrap up this week's video, like I said, here we are now, but now at the end of the week. And let's take a look at how the portfolio did. So interestingly enough, here we are now at $26,000. And I promise you, the only investment I made into this portfolio was just my $500, just like I normally always do. But here we are ending the week at $26,002 with a total return percentage of 40.96%, which is really neat to see. I don't think I've ever touched 40% in the portfolio, so this is definitely a first. And it just goes to show that the markets are going pretty wild right now. Everything is just pointing upwards, just like Dogecoin. Yeah, it must be Dogecoin just leading the way for us all, huh? But this nearly 41% return equates to a portfolio gain of $4,317. And of that, $298 are from earned dividends, and $4,000, surprisingly, is all from market gain. So really neat to see. Just as this is the first time touching base at or crossing 40% portfolio return, it's the first time crossing a $4,000 market gain. And if you look at the overall chart here, I know I do funnel the portfolio, but wow. But like I said, this is just a cherry on top. What goes up must come down at some point. And you know, I'm trying to be optimistic. Let's just remain that way for now. But just to give you a little picture of this past week's performance, as you can see here, the gain alone was $500, and then I did happen to funnel in my $500 deposit. And just to quickly take a look at the activity section for this past week, we started this week's activity on May 3rd, getting paid by ABM Industries, 99 cents, and also on May 3rd by a high dividend payer, AT&T, $5.15, along with Verizon, $3.26. And just like we always do, here's the $500 deposit. It happened on May 5th, or Cinco de Mayo. And what an awesome day. Here we are with a $19.35 snowball getting reinvested into the portfolio. Last week it was only $1.36. We'll just say the portfolio took a week off, but $19. Wow. And to close out this week's activity, we got paid $1.75 on May 7th by General Dynamics Corp. So that's going to be it for this week's video. I hope you guys enjoyed the portfolio update at 25K. I anticipate, like I said, the next update being at 30K, and looking at how the markets are moving nowadays, we might hit that rather soon, or sooner than I anticipate, honestly. But we'll just have to wait and see. It's hard to know nowadays. But the good thing is we don't have to know. We just have to stay focused on our dividends. It doesn't really matter if we hit 30K soon or not. What ultimately matters is, are we still getting paid dividends here in the Jesse's Cash Flow portfolio? And so far, we have been. So if you happen to make it to this point of the video, do subscribe if you haven't yet, or please consider. And do hit that like button, as it does help as well. And just like I always say, this journey of the YouTube channel, the journey of this dividend portfolio, it won't be stopping anytime soon. It's been a lot of fun so far, and I will see you on next week's video. Keep investing. Peace.